So I have the privilege, if you like, of going through hundreds of learning cycles a year, not just by my own investing, but by looking into how others are investing. And unfortunately, a lot of the time we have people come to us after they've already made a big mistake, or they have already bought and they're like, Jarrad, what do you think? And I take a quick look and it might be like, well, probably doesn't matter too much what I think now because you've already bought it. Or they ask questions like, can it be developed after they've bought it? And is it profitable to develop after they've bought it? It's not the right time to ask. So what has happened over the years is I've gone through all these learning cycles and I've tried to distill things down into a formula that can be applied to both established properties, building new properties, and development. And this formula sits over the top of those three property types. And how you execute it depends on the property type. So tonight I'm just going into established properties and how we execute that formula and giving you some real examples to cut your teeth on, and just remember that it can apply to those other two types of investing as well. So the first, which is critical, and having been through the ups and now the downs, I can see that those that have stuck to within 20% of the Perth median and 20% of the suburb median have always been insulated the most and protected the most, and always had the most number of buyers after their property if they have to sell, the most number of tenants willing to rent their property when we go to find a tenant. So I always suggest sticking within that 20% of the Perth median. So our median at the moment for houses is 512. Our median for units is 429, and there's the band that I suggest you stay in. Of course, there can be deals in any band, and these are just, you know, rules of thumb that I like to put over the top of things to protect us. It's not to say that you can't do an amazing deal at a $1 million property, but you're taking more risk, you know? So, as you saw earlier, the high-end suburbs have had a decent growth over last year. The bottom-end suburbs have absolutely felt pain, like no tomorrow, but the middle suburbs, they actually don't hit the news that much. They've stayed very steady. They've held their prices very well. So that price point's my first one. Now this might be a really obvious one, but my second part to my formula is buying well. And a lot of people don't understand what that really means. You make your money when you buy is a saying amongst investors, and it's so true. So there's a number of ways that you can buy under market value and buy well. I'm going to go into a few of them. So when we're helping people with our buyer's agency, acting on their half, trying to find them a decent deal in the market, we look for properties that are leased, because that immediately cuts down the market for that property to at least 20% or 15%. Only investors will look at it. A homeowner generally doesn't look at a property when it's being sold if it has a sitting tenant. Most just don't. It's too much trouble for them. They don't know what tenants are, how to handle them. They don't want the problem. So we look for a property that has a sitting tenant, and preferably the worse the tenant that is, the tenant that leaves their jocks on the floor when you go in the front door and you're having to jump over them. You know, they've got all their crap out everywhere. The lease might not be set up properly. It might be under-rented. More under-rented the better, because we know how to manage tenants out. We know how to, bring that back from a harder situation. And so there's opportunities in that. The next thing we look for is ugly ducklings. So that's, worst house in best street, properties that you can look through and see the potential of, that the majority of the market can't be bothered with now, more so than ever. When there's so many properties available, properties like this can't even catch a look. So they're going to be a lot more open to a lower offer, especially when they've been on the market for quite a while. So I didn't add that as a point, but we pretty much search and filter been on the market more than 60 days or on the market more than 90 days, and then we can start with those, Out of area agents. So we might sell across the whole of Perth, and we're very used to doing that and getting up to speed on an area quickly, but that's because we operate all across the whole of Perth already. One of our favourite ones with Buyers Agency is finding a local agent that has a property. It's his first time that he's ever sold in the area, doesn't know the area from a bar of soap, and drastically, gets it wrong on price, and it happens all the time. And they don't know things like what changes are happening, and is there a rezoning about to happen, and what the real potential of that property is. So that's another way we find really good opportunities. And of course, I hate to, we're not going about trying to prey on it, but a seller's situation, if they have to sell, if they're going through a divorce or a death or needing to move interstate, the way that I look at it is, if we're the best offer that they've got in front of them, it's still up to them whether they take it, right? We're not forcing anyone to take a low offer, but if it works for them and helps them move forward, many times in this market, they're willing to look at it. So a good agent will hold back and not disclose the seller's situation. The majority of agents are not good. You just go and play with it next time you're in a home. Why is the owner selling? Many will just tell you. What is the owner willing to take? Many will name a price 40, 50,000 below. That's before you've even gotten started. It's a lot of fun to play when you're on that side of the coin in this market, but not as fun when you're a seller. And that's why you need that real savvy skills at representing you more than ever now. Before, when the market was crazy, you could put a photo of your letterbox on the internet and you'd find a tenant or sell it in a day, when it's nuts. Now it has to be marketed perfectly, photographed beautifully, video, everything. You have to go to town just to get the interest. So here's a real case example. One of our clients finding hidden potential. We look for areas that are about to go through a rezoning, right? We were starting to look for a client to find them a duplex property. That's a 2-unit site. So they wanted to retain a front house and subdivide the rear. So that's not the purpose of our event tonight. But what we did do is we happened to this one was by chance, but it does make us look good. We happened to come across an veranda that was 2 months out from being rezoned to a higher density. There was a local, you can nearly see their emblem down there. I won't give it away, but you can maybe guess it starts with an S. So they were on at 540. 2 months later, when the zoning went through, we could sell it easily for 600. It's just a nice, $60,000 gain in 2 months without doing anything. It's a passive strategy to buy in areas that are imminently being rezoned. So they are also adding to that value by going on to do a 15,000 reno. Look, that's not looking terribly great from the street, so we'll render it, we'll do up the gardens, we'll paint throughout, put new carpets, and that'll probably take us to 15K, a minor fix up to the kitchen if we're lucky, bring all your mates in and get it done. And we're spending 22,000 on the subdivision. They're halfway through it. You can see there the aerial, it's a corner property, so we can cut a block off at the rear, and they don't have the money to go and build, so we're just going to probably sell the block or revalue, and they can pull their money back out. So that has a 134,000 projected gain with 22% return once those other two things are done. So 60,000 up front and then that other gain. So rather than just tell you go and look for a rezoning area, I thought I'd actually give you some tips of how you can find them yourself, and then you can email me and let me know some that I'm not aware of. I'll put you all to work for me. The planningwa.gov.au, you can register for alerts. They'll notify you when big scheme changes and other things are happening. I just keep, don't worry, they won't spam you. They'll let you know when the important ones are happening. Council websites, God, there's just so much crap on there, it's really hard to find anything. So I just like to pick up the phone and ask to speak to the town planner. Like, you might not realise as an investor that these people we're paying them rates and things to do a job, and they're there to take our calls. So they love speaking to people. Some of them do, some of them don't. Some of them, just prefer to stick to their planning. But pick up the phone, say, oh, can I speak with the town planner, please? They'll put you through. Say, look, I was wondering if there's any areas within your council that are coming up for recoding, any scheme changes happening, and they'll just go to town and tell you, the different areas, and, that's best to speak to the horse's mouth. They'll then say, oh, have you been on our website? And it's like, yeah, but can you tell me where within the website? Because it's just honestly so difficult to find the various there's just thousands of crap on there. Like, you don't care about stuff that's happening in 10 years. You want to know what's happening in the next 2 years or less. So, other one there, 2 years or less. Always look for your time frame to be less than 2 years, preferably 12 to 18 months. Because when it's beyond that period, it can get lost in the big black hole, which is the West Australian Planning Commission, and it can be, what often happens is when it's beyond that time frame, you call and ask 3 years. You call in another year, 3 years. You call in another year, 3 years, 4 years, it never gets less. But when it's within the final stages of the planning process, then the time frame's more reliable and more predictable, and the closer it gets, the more reliable that is. So when we were looking in Naranda, in that example, we just rang, and we always ask the question whenever we're selling any property, and more often than not, we can be surprised. So it's nice when you deliver that positive news. Don't sell now, wait another 4 months because we can get you more. So suburbs to watch that have got rezonings coming up that I'm keeping a close eye on. I don't have any that are within 6 months, but I am watching South Lake, Bibra Lake and North Lake, which are 12 to 18 months, and that's part of the lake revitalisation strategy. Scarborough has its Amendment 65. Oh yeah, that is within 6 months, and that's the Beach Road West area. Forestfield, Kalamunda, High Wycombe and Maida Vale is getting closer and closer to its rezoning coming through. That's 9 to 12 months away. These two you can be much more focused on and bullish about. This one, they're still deciding their policy for how to assess the higher code. So anyone that is in there at the moment, Nick's looking at me concerned because he has a property in there, we'll chat after, Nick. Anyone that's in, what they're actually doing is they're putting a dual density over a lot of their coding changes, which means they can apply their own special criteria to go to the higher code, which might be a minimum frontage size or a minimum block size, or you needing to be closer to the different amenities, or having to amalgamate with a neighbour. It's a bit of a stay out of. Don't go buying in there until they classify what that policy is over the next 2 months. So I spoke to them today, and that's still where it's at. But there will be a lot of opportunity in there, a lot of recoded areas, and once we get a green light, we'll be looking in there, because especially with what's happening with Forestfield and the airport, airport city link to the new train station. It's one of my suburbs of interest and has been for a good year or so. So step 3 in my formula is add value. We can obviously do this through building and development, but I'm going to focus on the renovating part tonight for the established side. So this was my very first renovation that I ever did. It was like my little baby. I bought it under market value at $189,000. Oh, there's very few properties in Perth like that. Some in Armidale, Logan would attest to, have headed back to that value lately. It's really struggled out there. This was in Huntingdale. It was valued at $240 by the bank on settlement. So
What was that, Jarrad?
Sorry?
What year was that?
That was 2006. Or 2005. So I did a reno. It took 4 months. I was expecting it to take a month. I learned a lot, including not to paint myself again, a few other things like that. You learn the value of your own time and how better others can do things to you. But it still was a decent little increase for me. On completion of that, we had a local agent valued at 330, which was a 57k increase over and above the 240. And it still gave me that equity to pull out and do more with. So I try to cycle the deposit through as quickly as possible with buying well and with adding value. And that gives you more back. Your position then's protected even if you choose not to buy again. But if you are, wanting to continue, you've got the money then. I've got some rules for renovation, and it really should apply if you're doing your personal home as well. Always look to get $2 back for every dollar, because if you're not at least getting that, then you're not covering other costs of your time. And there's entry and exit costs for property. I don't know if you've heard of stamp duty and agents costs. I am part of the latter, but stamp duty, we'll never see a decrease in it, I can guarantee. And renovate to an even standard throughout. The worst thing when we come to sell a property is there's an area that massively lets a house down, and this is true for any property, right? You want to have things at an even standard so buyers can't pick on it, tenants can't pick on any one area. And then it's nice to put 2 to 3 wows into it. Like you want something for people to get excited about. Put a little specky splashback in, spend an extra $300 on that. Something to bring the kitchen up, Women love kitchens. I can see a few nods, from women tonight. Kitchens and bathrooms, you spend a little bit extra in there and it gets you the extra return. Focus on what you can see first. It's so funny when we are selling a property and you hear what you think is a car at the front, you go out to take a look and, without them seeing you, and then they, storm off, drive off real fast. That's when you know that the first impression isn't right, because they've left in 30 seconds. And people will make a judgment really fast on a property. So always start with what you can see first, and start at the front of the property, work your way through, look around, what a buyer's going to see. I have people doing all sorts of crazy stuff on their renos of stuff that is never even going to be seen down the very back of the property in the corner that might, it's crazy. So I thought to mention it. And probably the most important point out of all of these is reverse price your, building in your profit. So what that actually means is go and look at renovated properties in the area, work backwards from there. If I spend 30,000 and the renovated one's at 600, I'm then at 570. I want to build in my profit, so your profit might be 40, 50,000. You want to at least be doing stuff for 10% profit with a reno, preferably 15%. And so you want to work backwards. So if you aren't even going to make anything and just going to give up some of your time to even coordinate people, you don't obviously do it. Start with the end in mind. And we can obviously help you do that if you're looking to do it. I suggest with renovations, it's not a strategy that you use to flip properties. I suggest that you do it when you're looking to sell. You do it when you've recently bought a property to boost its value quickly and recycle out deposit. But I suggest that by the time that you look at entry costs, exit costs, holding costs, everything, it's a better strategy for a buy and keep, or as part of a development or another strategy that you use on top. You'll see kind of by the end of this that when you stack all these things together, that's where it's like the most powerful, and you can really get an uplift in any market. So we've had people making decent money even over the last 1 to 2 years because they're being smart about it. If you just go out and buy any property, hope and pray, it doesn't work terribly well. I'm all about the law of attraction, but you at least need to stack some things in your favour and take a bit of action and improve your chances, So time is money, I touched on that earlier. Use professionals. I'm just all about professionals now. Like if I'm ever going to do anything, I just want to get the biggest expert in that specific area and pay for it because they're worth it every time. And it pays for itself, and the higher you value your own time, the more will come back too. But I don't mind rolling up the sleeves. You'll see me taking out the bins at the office quite a few times. And it's a bit of hard work, never goes astray either. So growth potential, how we go about this part of the formula is we use a number of prediction tools. You know how I was showing you the trend for the overall Perth market? We can look at trends down at the suburb level too, when the leading indicators of supply and stock on market start to decrease, stock on market and average days on market, when properties are taking less time to sell, when those two things start to increase, we see value starting to increase. At the end of tonight, I'll give you an opportunity for us to do a market insights report on any suburbs that you're looking at, or any properties you've got, any suburbs you've got a property in, and so fill that out on your form and we can do one for you. But we also have more advanced prediction tools as well that I invest a lot of money in. And so when an investor's looking to make a new purchase, regardless of the strategy, we always try to time it right within a suburb using these tools. It helps. These research houses spend it's their whole business to do research. They spend thousands upon thousands of hours every year doing it. I figure why not leverage that too. So the final point, which I touched on, is rentability. And what we want to do and try to do with that is I like to target a rental yield that is greater than 4%, because then there's not going to be as big a gap between your rent and your loan and other costs. That's still readily achievable in Perth. Our average rental yield's probably around the 4 to 4.5%. And the outer areas, the worser areas, still have a much better rental yield than that. So there's always a trade-off. You can go to Armidale and get a 5.5% yield, but then you might not find a tenant quickly, and you'll probably suffer some more pain in its price for a lot longer, and you'll have nightmare tenants. And I'm picking on Armidale tonight, but I've got a fresh one in my mind. Property managers at the back are laughing, so shouldn't laugh. We also look at the average vacancy in the area, and we want it to be less than 3%. That's getting harder and harder to meet in Perth when our average is at 6.9%. So less than 3% was the average over time where a market was in balance. So there's definitely suburbs that still meet that, or we look to get as close to these things as possible. And if you're not going to improve the property straight away through renovation or through development or through improving it, we want it to be desirable now. I don't like holding properties that aren't going to attract a quality tenant now, because it's going to give you headaches. So I prefer to improve them at the front end and then get a better tenant and happier days for everyone. So my top 4 suburbs for established suburbs, established areas at the moment are Willagee. I've put stats on here. You can see its vacancy rate's at 2.94%. Yield is very close to 4%. And what I've looked for in each of these is, if you go and do your research to confirm these, feel free to send me through your research as well. You'll see that neighbouring suburbs to these have done well over the last 12 months, and I'm looking for the ripple effect to them now. And there's other factors within these that are boosting them. So I've listed suburbs in each kind of price point, and you'll notice that I try to, back to my number 1 rule in the formula, I try not to go lower than that within 20% of the overall median. So that's why I'm in that band of the sweet spot. So if you're looking for more of a development property, a retain and subdivide, that type of thing, these top 2 are good for that. Beachborough's got a small area of higher density. There's none in Marangaroo, but Marangaroo is kind of my just general good choice for going to be a stable performer over the next 12 to 24 months is the time frame that I'm putting on these for performing and outperforming where I see